welcome you all to ET Forex Academy. This is a global trading academy where we teach people on how to trade the financial market. And we started a series understanding the financial market, and you're just joining us. If you've not checked out some of our videos, please kindly do just check the top right corner now. You see the link to the playlist. Click it so that you can go back and watch all the series and you can have more understanding about it. Also, please kindly subscribe to this channel. It really means a lot to us. Give us a thumbs up, click the like button, turn on the notification so you can get notified immediately we drop content. We drop content every Tuesday and Thursday, so you get notified. Thank you so much. All right, so tonight, like I said, I will check the votes on our Telegram channel. Most of the points carry the same vote, so I decided to just go with the first words, okay, which is how to set right stop loss. All right, I've seen a lot of traders on knowing how to enter the market. All right, they know what the market is going to do, but what stops them out is their stop loss. All right, they don't know how to place the right stop loss, they don't know how to place the right take profit, and it's really affects traders. All right, nothing makes you happy like seeing yourself set take profit and the market actually got to the take profit. Like the trades I took today, when I check it, I saw that the market actually touched my take profit. It makes you feel confident in your strategy and make you believe in yourself that yes, I know what I'm doing. All right, so I've once been there, okay, and most traders still experience it. I still experience it sometime. All right, but I'm going to be teaching you the strategy I use in overcoming my stop loss being triggered, okay, why trading in the market. All right, so let's dive into it. So basically we have two ways of making profits in the market. Number one is either you allow the market to touch or take profit. Number two, it's either you close in profit yourself. Okay, so I would like to start from number two before I go to number one. All right, closing profit yourself sometimes are more beneficiary than leaving your trade to eat your TP. Okay, and let me explain that. When you open a position in the market and you see the market moving in your direction, fortunately, which is good, all right, and you are being skeptical, one, that trade might go back, all right. Once you start having that thought, I'm telling you now, guys, once you start having the thought that this market might not get to my take profit, okay, close that market at a profit level you are satisfied with. Okay, assumption does not control the financial market. I want you to understand that. Assumption does not control the financial market. Don't assume that, okay, at least it should touch it. Okay, once you see that the market is or might go back, all right, or reverse or not get to your take profit, just close the market at your desired price or at your desired profit. Okay, that's number one way to it. Or you adjust your take profit to a desired level where you feel like, yeah, the market is going towards eventually get there. Okay, so that's on take profits. All right, so it's either you close your profits by yourself or you adjust your take profits to a level where you think that the market is going to get to. All right, the reason is once you start assuming or once you start getting the nudge or the feeling, all right, that this market or the trade you are in might not get to your TP, there is something, because your brain has been, what you are doing has been tuned to your brain. All right, so your brain is like a computer. All right, it's like an artificial intelligence. It's going to tell you that, oh, this thing you're doing is out of what you planned. All right, or after seeing it and processing it, okay, I'm telling you experience. After seeing it and processing it, so I feel like this thing you're doing, all right, it might not really work out the way you want it to work out. So your brain is going to be giving you that nugget, all right. And I like balancing my teaching, okay, because I know some of you like, what if I close it and it eventually get to my take profit? Fine, if it eventually gets to your take profit, is good. You've learned, all right. You learned your lesson that okay, this is the reason why you did this. You learn from how you get to the take profit, so that next time when you're setting your take profit, you will be certain, all right. It's better than you assuming and it go back to your stop loss. There's nothing is as painful as seeing market in profit, and when you go back to check, you're already seeing it in loss. And when you think it's going to go back to profit, to see it touch your stop loss, you feel like, what is happening? Why did I close in profit when I saw it? All right. So that's that on that. When you start having the nudge or the feeling that this market might not really touch my take profit, it's better you close it manually. All right, close your take profit manually. All right, and the second one is setting your take profit at the right level. All right, which I'm going to teach you now. Okay, the first one happens mostly to beginners traders when you don't know what you're doing and you feel like, this market is in profit, I'm afraid, just close it. All right, but the second one is for, let me say, professional or intermediate. All right, because you know that okay, this market, this is where you are coming, this market, this is where you are going to. So I'm going to set my stop loss here, I'm going to set my take profits here. Like the trade I took today, I already know the market was going to get there. All right, and I was very happy because the trade was hit my TP. It hit my TP. It was a synthetic trade. That's why I did not drop it from the group. Okay, so setting your take profit at the right zone. We are going to be looking at that today. And also the other one is stop loss. Okay, it's unlike TP whereby you can close, all right, your profit right manually. Okay, stop loss, you have to set it at the right position. Now the question you ask in your mind are, but you can still close your trade when you see yourself in losses. Yes, it's very, 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 very what possible. Okay, so but it is not much advisable, all right, because it's better to close in profit than to close in loss. Okay, all right, and that's where risk management comes in. Okay, so on the trade, if you've said okay, I want to risk $5, you already assume, you already put your mind that I want to risk $5 from this trade. All right, and you've done your analysis. All right, you've done your analysis, and the trade is not going the way you want it to go. All right, just leave it. It doesn't mean you are wrong. It does not mean you are wrong most of the time. It might just be the market makers trying to manipulate, trying to get liquidity. And if your stop loss is at the right region, the right zone, you don't have to be afraid. Just leave it. And even if it eventually touch it, you know yourself that this market does not even go my direction. So something actually went wrong. All right, it was my fault totally. I was the one that made the mistake. That was why it went against me. Now the best thing for you to do is to learn from the reason why you made that losses. Okay, guys, I just want to confirm if you are hearing me. Just let me know, give me a feedback.
Yes, sir.
All right. Okay, so let me continue then. So like I was saying, just if the market reverse touch your stop loss, all right, without even going to your profit level, all right, that means you are the one that needs to work on your strategy, work on yourself, work on what you miss. But if the market has already entered your profit level, all right, maybe almost touching your TP or half of your TP, and then you're feeling that this market might reverse, or due to some things you later see after entering the market, all right, it is advisable to close in profit. All right, it's not advisable to close the market in loss. It's advisable to close it in profit, because most of the time when you close markets in losses, all right, you just see it all of a sudden the market just entered profit level. All right, it's very painful, but at least if you close it in profit, you know you secure some little profits. All right, even if not what you originally planned for, you secure some profit. Is better than going into losses. All right, so we are going to be looking at that two things tonight: how to set stop loss and TP right. All right, so I've explained stop loss and take profit, and I believe you understand it now. So coming back to how to set it right, All right, I've gotten a lot of questions on that. All right, and a lot of people have asked me questions. How do you do this? How do you set your stop loss? Right. All right. It all boils down to the strategy you are using. Okay. It all boils down to the strategy you are using. All right, and what level of risk you want to expose yourself to. Okay. So one, if your strategy is a risk to reward strategy, that means you risk little to make much, then you know that you have to trade zones. You have to be very patient and trade zones so that you can get little risk and have a large reward. And if your strategy is that you are risking percent of your capital, okay, for example, you are risking 10% of your capital, all right, or 20% of your capital, the way you are going to be setting your stop loss is going to be different from the way I'm setting my stop loss. Okay, so it all boils down to your strategy. So now, tonight, I'm just going to be using this strategy I've been teaching you, the supply and demand strategy that I've been teaching you. And we are going to be analyzing the market, and we're going to be setting stop loss. Okay, and you know, like I used to do it, I'm going to pick a currency and we're going to play it back so that we can analyze it and see it the way it works out. Are we ready, guys?
Yes, yes, sir. We are ready.
All right, so we are going to be doing Euro Australian dollar tonight, and let me just try and replay. All right, so let's just say this is where the market is. All right, and first thing I told you is I was check the overall direction of the market. Go to your monthly time frame. What's the overall direction saying? All right, so I think you've done this several times, and there was a downtrend. There was a pullback to the supply region, and the market was continuing to the downside. But it seems as if the market wants to go back to the supply region here so that it can come down, but we are not sure. Or we just know that this market is a downtrend. Okay, so we go back to our weekly. What is our weekly saying? Then we look at the recent thing happening. What's the recent thing happening? All right, this is it. This is where the market respected that supply region. All right, so we have a structure. We have a structure low. Then identify your structure low. What is your structure low? All right, so we have it right over here. This is a structure low. Okay, so we identify our structure low. Check the order that created that demand zone that broke it. All right, and then try and fix it in. Okay, so we got that one right, and you can see I told you there was a break of this demand. That means it created a new demand, leaving liquidity at this area. There's liquidity here, so the market will surely come down to grab the liquidity. It might take time, and it might grab it on time. All right, so the next thing you need to look for is, okay, this the which supply zone created this overall demand zone, the swing high. All right, so we have this right over here. We have the swing high, okay, and we have it right over here. Can just try and zoom in. I don't know if you can see my screen, but let me just increase it a bit so that you guys can see it since you're dealing with recent market. All right, I believe you can see it now. So, all right, so we have this for the market start falling, and obviously it didn't really touch this order, it didn't touch it, so there's probability this market is going to come back to touch it before it continues to the downside. All right, so now let's say we are looking for a buy position to the upside. All right, so this is where we are. We're looking for the market to come back either here, okay, or even to come back to this up the supply zone, because the market has not respected or has not come back to this zone. All right, the supply zone that created all this stuff. Okay, so right over here. Okay, so let's say we want to enter this market here. All right, so you can see the market created a demand zone, went up here. All right, came back down to create a new demand zone. All right, so let's say this market is here, but we are still waiting. We are waiting for confirmation. So let's just play this market and see how this market will play out. Okay, we're going down, still going down, still going down. Okay, all right, so still going down. Yeah, fine. All right, so we've seen what we want to see now. We've seen the market come back to this demand zone, and we've seen this candle, the pin bar, the market has seems towards we expect it. So let's go to our daily time frame, our 4 hours time frame, and see if we can look for a good entry in our 4 hours time frame. Let me check daily. All right, so let's say we have this. So we are supposed to have a W, and the market has not actually given us. So let's wait. We're supposed to have a W, go up, come down, then continue. Oh, it's not playing. Why? Okay, so let's play then. Let's see what happens. Okay. Okay, I think. Sorry. Yes, has removed it. Trading view. Hasn't. I'm coming, guys. I don't know why trading view is doing this to me. It's kept doing this all the time. So please let me reload it. Okay, I've not forgotten what we analyzed. I don't know why they're going to keep saying this to me. Sorry guys, please, I'm trying to fix it. Let me see if it will work out again. Alright, let me see if it will work out again. Alright, so let's continue. Alright, so we mark out this area that the market needs to come back either here or continue to the downside. So let's see what happens. All right. So the market came back, all right, to this region. All right. So let's say we want to set stop loss. Please pardon this on the weekly time frame. I don't know, the trading view is not going to the lower time frame. So let me just say we want to use the weekly time frame, and let me just do how to set the stop loss and the rest. All right, so we want to go short on this market right now. All right. Now we've identified our strategy. The best position for me to put my stop loss now is to look for a supply zone. All right, that the market did not get to. All right, see, there was a supply zone here. Okay, so the best thing for me, if I should do this, that would be like the best thing for me to do. All right, and if I'm doing that, then my stop take profit should be my next demand zone, this area. Okay, let's say this area. All right, this I did is because I'm on the higher time frame. If I'm on the lower time frame, my stop loss will never be like that. It will be something around there on my lower time frame. All right, so if I did that, let's say I went to the 4 hours. Okay, that's not okay. So let's say I went to the 4 hours. Okay, like I told you, my stop loss will not be that. All right, my stop loss will just be just here because this was a supply zone. This area right over here. Let me try and zoom it in so you see. So this was the supply zone. So my stop loss will definitely be around there. All right. So, and voila. Okay. And if I have to have entered this trade, all right, I will have waited. This is the first leg. All right. Came back the second leg. Voila. It came all the way down. And I will have taken my take profits at this demand zone, which you see the market was did exactly just that. The market came back to this level. So now let's do another market so that at least you guys can see another thing from here. Oh, Euro card. I don't like Euro card. Euro JPY. Okay. All these markets. All right. So currently now, this is what we are having at Euro JPY on the 4 hours time frame. And it seems as if we don't even know what this market wants to do yet because we are not sure. It has created the supply, it has retested the supply, it has broken the structure. I think this market is coming back here. So this area right over here. Okay, so let's say if the market is coming back there on the 4 hours. All right, if you scale it on the 1 hour, let's see. All right, so this is a new supply zone right over here. Okay, so if this market come back here and respected this zone, fine. This is what we are going to do. Then we are setting our stop loss. Our stop loss will be above this previous supply zone that the market did not break. All right, because anything that makes the market breaks this previous supply zone, it means that it's going up to create a new supply zone, and we don't want to expose ourselves risking too much. No, it's too much. Okay, so let's say we put our order here, our stop loss will be right here. All right, it's just above this place. Okay, just like that. That's where our stop loss will be. And we're going to look for a new demand zone. This demand zone that has not been tested. All right, to come here and look for the demand zone, then draw it down. All right, fantastic. And you don't need to have a long trade. All right, remember this is on a 1 hour. For the market come here, all right, come down, and you are sure that the market is not going to touch your stop loss, and before you know it, if you respect it, just what break even, and that's just it. You are not risking anything again and again. All right, so let's say we have something like this. Let me try and do the weekly. Okay, it's not going again. All right. So I believe you understand what I did, right? Is there anyone who have question? Any question? So basically, if you are using supply and demand, all right, let your stop loss be a little bit above the supply or a little bit below the demand zone. Okay, and if you are using trend line, all right, but I will advise you to use it because that's a strategy I'm teaching you. All right, in fact, I should not even show you trend line because that's not the strategy I'm teaching you, so you will not get confused. Okay, but if you are using the trend line strategy, okay, if you come down, all right, you look for the supply. All right, so let's say you wanted to enter this market at this junction here. All right, so let's say you want to enter the market here. Maybe you waited and the market came back to retest and you see the retest. All right, so the best thing for you to do is look for the next supply zone. All right, that the market, this is where the market created a new supply zone. We expected this, The supply zone is up here. There's a little bit of supply zone here. All right, that's rally-based drop. Okay, so the market did not definitely touch here, so you put your stop loss. All right, just a bit above here, because anything that makes the market go above that area, it means that the market is creating a new supply zone, and you don't want to wait and lose money. All right, so what's your TP gonna be? All right, so you look for the next demand zone if you have one. All right, so if you don't have one, you use your Fibonacci. All right, it's not hard. Use your Fibonacci. Look for the swing high, the swing low. All right, and if you want to check it, this was the swing high. Put your Fibonacci here. No, this is not what I want to do. All right, put this one here. Oh, okay. From this area, take it to the swing low, swing high. All right, so it's going to give you extension. All right, so it's going to give you extension. All right, so you can use the first extension here. Boom. All right, so let's see. If you use the first extension, let's see what happens. You can see the market came down. I didn't even know that. Just I use it because that's what I've been using. You use the first extension, wow, the market touched your TP right over here, and you are in massive profits. Okay, so if you not see maybe any support or demand zone at the left, just use your Fibonacci, check your extension. Market always respect the Fibonacci. Check your extension. If you want to push it further, the more, use this other one, use your TP2. All right, let's see, the market has gotten to that level. So the market is coming back here, definitely. All right, guys. So I know I've analyzed this market. If I'm able to enter this market from here, I'm telling you guys, I'm swinging it all the way down here. That's what I'm doing, guys. All right, I think I should even send this on the group so that you can know. I'm swinging it down, all the way down. That's what I'm doing, guys. All right, since I suspended this first and we are in a downtrend, all right, if this market doesn't break this supply zone, if it doesn't break it, okay, so now let's use the current one. All right, so if the market doesn't break this supply zone right over here, so where's your stop loss going to be? Sure, okay, I'll choose to say. So I will enter the market here just like I've done it. All right, so what do I need to do? Look for the next supply zone. Okay, this is the supply zone here. Okay, we've done this. Let me delete this, guys. Look for the next supply zone. If I don't find it, I can go down to my 30 minutes time frame. All right, to find it, to look for it rather. All right, go to my 30 minutes time frame. All right, I think, yeah, I found one here. Yeah, this exactly this area. Okay. All right. So anything that makes the market go above here, that means its market is trying to come here. So, and it will be very ridiculous for me to now put my stop loss to this level. All right. So if you take me out right over here, I'm waiting for it to enter. I'm waiting to enter around this area again. All right. So that's what I'm going to do. And you can even see. All right. So although this stop loss is still outrageous for me, I'm going to make sure I scale it down. It's too much. All right. But for this kind of trade that I'm going long to this extent, you can see this would be like, let me finish and see. All right, this is like 586 pips, guys. 586 pips. 586 pips. If I use 0.1 lot size, that's $586. Imagine. All right, and I'm just, if I see what I'm risking, guys, that is 8 to 31. All right, 8 to 31. It's too much for me, self. But that is 8 to 31. I'm risking 8 to 31. Okay. But if I say reversal, I'm sure I'm going to draw this thing down. I'm so sure I'm going to draw this down. So that the risk to reward will not be too much. All right, guys. So, guys, do you have any question? You see what I've done, all right, for the supply zone. Do you have any question, guys? Hello.
Hello, I don't have any question.
All right. So do you understand everything we've been saying?
Yeah.
Okay. Who else has any question? Maxwell, Sachi, Val, God's bless. Is there any question?
No question, sir.
Oh, all right. So I believe you
No question.
understand. You understood. Hello. Someone said
No
something.
question. No
All right. So
question.
I believe you understood. So this means that you understood everything I've taught you guys.
Yes, sir.
All right. So please try and use it, implement it. Let me see if you have any challenge with it. Or see, we're just entering this market. I'm waiting for this market. Once it come back here, I'm selling this market. I'm waiting for it. I've seen the change of character. All right. I'm waiting. Once it come back to this level, I'm not even planning on selling now. I'm not even planning on selling GBP USD now at all, at all. No matter the temptation. I'm waiting for it to come back to this supply zone because there's a lot of imbalance here. A lot of imbalance in the market must be. Once it comes back to this area, I'm going to send it to you guys. We're going to ride this market down, all the way down, and we're going to make massive profit from it. All right, guys, thank you so much for tuning in into for tonight's section. I'm really glad having you. I'm really excited.